Welcome. You're watching BQ Prime with me, Tamanna and Inamdar. We're talking about Q2 numbers today, and a company that seems to have done very well. The street seems happy with the numbers as well. Has been a sort of a darling of the markets in the last 1 year. RateGain Travel is what I'm talking about, and Bhanu Chopra, Chairman and Managing Director, is with me on the show today. Welcome, Mr. Chopra. Thank you for joining us on the show, and looking forward to this conversation with you.
Thank you, Tamanna. Thank you for having me.
Okay, now before we get to speaking with Mr. Chopra, let me just take you through what the numbers are and why the excitement is there. I'll start with the year-on-year numbers, which is 88% up in revenue at 235 crores. EBITDA is up 2.68 times at 46.4 crores. EBITDA margins at 19.74 crores, a healthy gain there versus 13.84 crores. Reported profit up over 2 times at 30 crores. But this is a SaaS company. It caters to the travel industry. We should look at the sequential numbers as well for better perspective. So quarter on quarter, revenues were up 9.8% at 235 crores. EBITDA was up 24% at 46.4 crores. EBITDA margins up 19.74% and reported profit up 20%. Now, Mr. Chopra, a lot of gain coming from your acquisitions, important acquisitions, I would say, in the last 12 odd months. And we're seeing the fruits of that now, isn't it?
That's absolutely right, Tamanna. And, as something that I've been stating, the macro factors have been favoring us as well. As right out of COVID, there was this trend of revenge travel. And I also believe fundamentally, human beings' attitude towards travel and life has changed dramatically because people want to now prioritize experiences over buying cars or electronic items. So even though there is talk about high interest rates and inflation in US, which is a predominant market, we're not seeing any letdown in travel. The demand is pretty robust. And so, just the macro level factors have been favoring us. Also, in addition to the inorganic growth that you mentioned, the organic growth numbers have been pretty good also for us. We grew at about 35%, and it's very well diversified across all our 3 product lines of DaaS, distribution, and MarTech. So all in all, very pleased with what the team has been able to deliver. And, like I said, we continue to remain very, very bullish about the future as well. Our growth is going to be on the back of the growing industry. But in addition, we continue to launch new products on the back of acquisitions that we're doing, and also products that we are building through our R&D department, which we call RG Labs, and continuing to gain market share with the mature product lines that we have. We've expanded in LATAM, we've expanded in Middle East. So very, very bullish on the growth prospects. And as a result of which, I've reiterated in quarterly earnings calls also that our aspiration is to double the revenue. So we run rating this year, we should close in to about 1,000 crores, and our goal is to double that revenue in the next 3 years.
All right. What you also said in your call was that you look at organic growth at 20 to 25%. The rest is inorganic. Could you give us a picture of your M&A plans going further?
Yeah, so Tamanna, the way we look at M&A is that, as I've talked about, our overall vision is to become sort of the tech plumbing, the de facto tech company for travel and hospitality industry. That's sort of our big, hairy, audacious goal. And in the next 3 years, what we're aiming to do is build this integrated platform that allows our customers to acquire guests, to retain and engage them, and have a wallet share expansion. So there's still a bunch of white spaces in terms of product capabilities that we don't possess. And when we look at M&A, we are looking to fulfill, those white spaces. So we have a programmatic M&A program that we run. We continuously engage with companies. This industry is extremely fragmented. We have a database of about 350 companies. At any given point, we're talking to at least a dozen of them. And, there are a couple of companies that are, in advanced stages as we speak together today. And hoping I'll have more to share with you, down the line as some of these conversations fructify.
How much are you hoping to spend? Can you just give us a sense of what spaces and, what are these white spaces? Some kind of a clarity there, and what is the sort of spends that you've earmarked for inorganic growth?
So I would say if you look at all our three different business lines of DaaS, distribution, and MarTech, we're looking at companies that are providing adjacent, capabilities in those areas. So, we are evaluating a company in the distribution space. We are evaluating a company in DaaS, and our sweet spot historically has been about $20 million in terms of the ticket price. Even the last company that we bought, Adara, we bought it for about 18 million. And we will continue to look at opportunities in that size. We are at about 400, and we have about 425 crores on our balance sheet today, as per end of last quarter. And there are some opportunities which are larger than that as well that we are looking at. And as you have looked at our past acquisitions, also we've been very, very judicious about what we pay for them. Most of our acquisition sizes are between 1 to 2 times revenue. And we are hoping we can continue to buy assets at that price. So it's still talks are in progress. When I have something more concrete to share, I will.
All right. Now, you mentioned North America as an important market, primary market. Can you give us a broad sense of the breakup? How much of your revenues come from North America, and then the other markets that you're progressing into?
Yeah, so geographically, 60% of our revenue comes from North America, about 25% from Europe, and the rest is rest of the world. We continue to see robust growth in all our key markets. But in terms of our penetration, it was, quite small in Middle East and Latin America. So those are, particular geographies we're looking to now expand. And we've hired, some sales and marketing folks locally. And we will continue to expand on that. In fact, in Middle East, we expanded quite dramatically over the last 12 months. But because of the ongoing conflict, we've put a pause to those plans. But in LATAM, we are continuing to expand. And also in terms of the customer mix, I'll give you a flavor of that too. So 45% of our revenue comes from hotels. 20% comes from what are called destination management companies. These are tourism boards of governments. We recently tied up with Brand USA, which is promoting tourism in USA, Visit California, Visit Dubai, the Saudi Tourism Board. We also do some work with Incredible India. So we have, 20 to 22% of our customers that are, destination management companies like this. 15% is OTAs. And then there is about another 5% in airlines and 5% in car rental companies.
So a lot of companies in your space, in your sectors, have been talking about the sort of drop in discretionary spends, the dampness in discretionary spends. You are not experiencing this as companies look to cost cut. Is that not happening in the travel industry?
Yeah, so Tamanna, I think, fundamentally human beings have changed post-COVID, as we all know, and especially their attitude towards life in general. So, I think if I ask you as well, the number of trips you used to take pre-COVID and now post-COVID, I'm sure you're traveling a lot more, and so am I. And I think that's a general phenomenon we are seeing wide across. And so, we see more impulsive travel, we see more trips, shorter trips in duration. So as a result of which the travel demand is holding out pretty robust. I think also what's helped us is, the companies have done really, really well. If you look at all the big hotel chains, the big online travel agents, they're reporting record revenues and record profits. And now because of the strength of the balance sheet, they are wanting to reinvest in digitizing. Because one of the challenges the industry has faced is labor shortages, as people left because of COVID but didn't really come back at that same speed. The industry realizes now the need for digitization, and we've been huge beneficiaries of that trend as well.
So to answer my question, there's no dampening in discretionary spends?
Yeah, so even if you look at the recent consumer surveys that are happening, people are prioritizing travel,
Okay.
in that high, it's top of the list when it comes to discretionary spend. So as we speak today, when I look at the health of our business, the volumes, the travel bookings that are transacting through our pipes, the engagements that conversations we are having with our customers. If you look at our deal wins last quarter, it's 3x of last year. So there isn't any data points that signal otherwise so far.
Feeling the wind chill of that kind of a concern. That's great to know. But I just want to understand what the current geopolitical situation means for you. We have an ongoing war, Ukraine, Russia. You talked about the Middle East conflict. There are concerns with interest rates in U.S. economy, etc. Not very sure what's going to happen in first half of 24 calendar year. Is any of that on your horizon as a possible headwind?
Yeah, so look, of all the things that you talked about, I would say that the Russia-Ukraine war and the high interest rates, we've seen that play out now over a couple of quarters, and it hasn't really created any sort of an impact. But the more recent one, which is in Middle East, and how that conflict is enlarging and involving other countries in the Middle East. And as I was mentioning to you, Middle East really became an area of focus, and we were really investing in it. And we've seen some tremendous wins with Saudi Tourism Board, as well as NEOM, which is like the big ambitious project by the prince there, the line where we were empaneled as the distribution partners. And all across the region, we were seeing some really, really good momentum. So that sort of come to a little bit of a pause, and our plans of investing in there has also come to a pause. So those are the kind of events that are obviously top of mind. But again, I'll go back to something that I was saying. Fundamentally, people's attitudes have changed. So we might see these blips, throughout our journey. But I do not believe there is going to be a structural shift. I do think that they might pauses to people's travel plans, but it will come back with a vengeance.
All right. Thank you for joining us today, Mr. Chopra, and talking about what has definitely been a good quarter and a positive outlook from the management. Thank you.
Thank you.